Okay, and we're live now. So good morning, everyone, and welcome to another episode of the Crypto Hour, where we talk about the latest news in crypto, and also we look at the macroeconomic news to provide context, to the crypto developments. Now, what would you like me to talk about today? Now, how everything would be rosy and the economy will be great. House prices will go up, wages will go up, inflation will go down, food will be cheaper. We'll all be eating at a restaurant every night. Yeah, that'd be nice, wouldn't it? Yeah, it would be nice, but unfortunately, I'm not into fables, but I'm more into kind of like facts and figures. And so this is what I share with you. Okay, so let me start sharing my screen. Okay. Okay. So first of all, let's start, as usual, looking at the kind of reports and what came out this week in the economic news. As you can see, it wasn't a particularly busy week, especially the first part of the week. Although yesterday we had a few announcements regarding the euro, and also we had the GDP figures for the US dollar and the unemployment claims that always tend to move markets a little bit. So, but more than the figures themselves, I mean, it's nothing really unexpected. It was the GDP figures in the US were slightly lower than the expected level, so from 2.7 to 2.6%. And also inflation, as surprisingly in Germany, has surprisingly shown an uptick. So instead of coming down, it seems to be going slightly up. And today, we waiting for the GDP figures for Canada, and also the PCE price index, which is another inflation figure, which is interesting. It differs from the CPI, which is consumer price index, in the sense that this is the PCE only measures goods and services targeted towards and consumed by individuals. And it also, if you look down here, is the Federal Reserve's primary inflation measure. So is the one that they use to then make, this economic decisions on raising interest rates, tightening or loosening monetary policy, etc. Okay, but apart from these news, what was more important this week is the speeches given by elected officials, and especially from Jerome Powell. And not only that, but that was following, as we know, the banking crisis that we had. And if we it's just starting, what shall I start? So if we just look at the S&P 500, okay, the main share market in the US, and this is the week's activity. Okay, so this is where we start at the beginning of the week, and this is where we're going, where we are right now. So the market has gone up. What do you think has been communicated to the markets from the officials? Okay, anybody has any idea? Would you like to share? So, strictly speaking, one, they try to reassure the markets. Okay, so the from the point of view that don't worry, there is going to be no contagion from the banking crisis, and we will handle it, we'll cover it. Don't worry, if needs be, we'll cover people's money deposited in the bank, so there's no need to do a run on the banks. Okay, this is number one. Number two, why are the banks in trouble right now? And I'll show you in a second why they are in trouble, why they are still in trouble. So this is not, we're not out of the water by any means right now. But why are they in trouble? So what's the business model generally of banking? Is they borrow on the short term, and they lend on the long term. Okay, and so they make money because generally short-term borrowing is cheaper and long-term lending is more expensive. Okay, so between, in that difference, so the banking scissors, or so they call it, and in that difference there is their profit. Okay, so borrowing low, lending high, that difference is their their profits. Now, this is the problem with the banking sector. So this chart, plots the difference between the 10-year, the yield of the 10-year Treasury notes in the US and the 2-year Treasury note in the US. So generally speaking, and if we look at, this is a weekly chart, okay, so it goes back all the way to 1988. Okay, so as you can see, just without getting too complicated, but where is price generally more comfortable, or at least where it has spent most of its time during this like 30 years history, is pretty much in this range between 0.5% and 2.5%. So that's the difference between the long-term Treasury notes and the short-term Treasury notes. Okay, so and generally speaking, this is the bank's profits. So as you can see, it goes up or down, but this represent pretty much, being quite obviously, don't quote me, not precisely, but generally speaking, this is where the banks make their money. Okay, so it generally has been above zero, and the few times where it has been below zero are preceded recessions. So we can see this, when we had the the dot-com boom in the 80s, and then the recession that followed beginning of the 90s. This again into the year 2000, and the more recent times, the crisis of 2008, we can see was preceded by an inverting of the yield curve in 2007. So generally speaking, the recession follows, after a period of 6 months to 2 years after this happens. And generally speaking, we are, these inversions last a maximum of about 1 year, generally 1 year, 1.5 years maximum. And this is the issue now. We're going back to the present day. This is the issue now with the banking problems, because many banks, what they have done, obviously they have borrowed short term and they have lent long term. But what's happening now is that the long term, as you can see, the short term yields are more expensive, the short term bonds, than the long term ones. So instead of making a profit out of that difference, this is costing them. And in particular, because, it's not that banks are, when they do a run on the banks, it's not that they undercapitalize, because if they can hold all their bonds to maturity, they would have no problem, because they will get their money back. The issue is that they have to maintain a certain ratio of capital to deposits, okay? And the bonds must be marked to market in many cases. So when the yield goes down, so the price of the bonds, the price of the bonds goes down, and so in their balance sheet now they're worth less. So what they have to do, they have to then get new investments, new capital, to be able to maintain this lending ratio. Okay, and so what is the the banking regulators, the Jerome Powell, the chairman of the Fed, what are his powers? He has to maintain price stability and he has to reduce inflation. And the other thing is that his other remit is employment. Okay, so these are the figures that they look at. They look at inflation, they look at price stability, and they look at employment. Okay, now they got to the point where they have raised rates quite aggressively over the last year. Okay, and and this is actually harming the banks, because the banks are invested long term, so their returns are fixed. But by raising these interest rates, that means that the short term cost the bank to finance their balance sheets is rising. Okay, so raising interest rates more would cause more problems to the banking system. Okay, so from talking about we're going to aggressively, raise interest rates until inflation is back under control and back, below 3%, to now saying, well, not necessarily have to increase interest rates to reduce inflation, and they're also saying that probably there's only one interest rate rise before the end of the year. So they are trying now to calm the expectation of the markets on the way up. Okay, and so you can see here how the markets have reacted. In a sense, these past 3 weeks, the actual inversion of the yield curve have actually lessened by quite a lot. They've gone from almost like -1% to, at the moment, minus 0.5%. So although the interest rates have been increased, the difference between long-term interest rates and short-term interest rates now has reduced, because the market now doesn't expect interest rates to be raised as aggressively, but this policy to change. And so we might be looking now at what? Remember what happened in 2020. Okay, it would be monetary policy easing. And then when it happened towards the end of 2021, beginning of 2022, monetary policy tightening. Okay, so we're now in a position where the markets might start to actually have to tighten again. Sorry, ease again, because they are trying to do everything they can to save the banks, basically. Now, and that's the kind of like, that's one of the issues. Okay, now if you see, how do you see if banks are actually requesting more funding or less funding? They have generally three types of funding available to them, short-term funding available to them, and one of them is the Fed itself. The other one is the BTFP, that was newly created Fed facility that takes treasury and bonds, but without any costs, haircuts, in a sense, like any reduction in what the money that they give to the banks in exchange. So they don't apply a lower price to them. So, and they lend up to 1 year at the 1 year interest rate plus 10 basis points. So this is not something that you will be able to get to borrowing at, but the banks can. So basically it's 0.1% above the 1 year interest rate. So you see how this affects directly the cost that the banks are paying to get funding. So now their funding costs 4.7%, which is the 1 year rate plus 0.1%. So the first discount window is actually kind of discouraged, and it attaches quite a high stigma to it. The second window is being used quite widely, and the third one is not the Fed, but this is the Federal Home Loan Banks program that allows members banks to post collateral with haircuts, so at a reduced price, and that market value to get funding. Okay, the funding duration is flexible, but this kind of funding is more expensive. So as you can see, how much did banks use these facilities? Okay, so they use about 160 billion of it in when the SVB bank had its problems, and 0 the week after. Okay, if we know that out of this, 110 billion was from the First Republic Bank, that drew it, and the rest of the banks only drew 50 billion. So it looks like, there is not, this is not a big deal generally for the US balance sheet. So it doesn't seem a kind of like a big problem, But if we look at this, the FHLB advances, that shows a different picture, because it shows that in these last 7 to 10 days, they have raised as much as 300 billion. Okay, and this is way more than what they normal issue. So, I mean, I'll show you another thing that's slightly troubling. Okay, so this is the Federal Reserve. Okay, this is the Federal Reserve website. You see up there, federalreserves.gov. Okay, now this shows you the recent balance sheet trends. Okay, so total assets for the Federal Reserves. So look at it where we were in 2008. We were at about $900 billion. Okay, and then we had the crisis of 2008. So what happened is that it's more than doubled. The assets of the Federal Reserve more than doubled within, literally within September and November, in 2 months, more than double. So it's what normally is what the politicians say, well, now this reduced to previous levels, but they don't really. So there is a little from 2.2 trillion to 1.9, and then start growing again. Okay. And what happened then here in 2000? So it grows up to 4.5 trillion. Then there's a slight decline between 2008, beginning of 2008, and mid 2019, and then we hit 2020, and look at this, we're going from 4 trillion to 7 trillion. Now, people say inflation. What is inflation due to? When you pretty much like double the amount of, liquidity, and so you inject basically these extra liquidity into the market, what do you expect to happen? Is that there is now, people are now more money to buy the same things, so inflation would follow. There's no, there's no going away from that. And so even from 2020, as you can see, there's, it went down slightly and then it climbed again all the way to 2022. Now, this is where beginning of 2022 is when the Fed started tightening monetary policy again. So we went from almost like 9 trillion, we went down to 8.3 trillion. And this is what happened in the last week. So again, an injection of an extra 300 billion. So this is probably like, you can see like history repeats itself. A little drop here, and then we climb. Another little drop here, and then we climb. Another little drop, and then we climb. So now then we are, I think, exploring a new paradigm. And so they are, if the banking system has to survive, there will be more money to be injected into the market, and then we'll end up into, we'll soon be into double figures in terms of trillions. So, what's the reaction? What was going to happen because of all this? And there is no other way of this to manifest in the economy but more inflation. Okay, so you see what the problem of the regulator is now. So they have, in a way, the only way that they can, carry on this castle of cards is by printing more money. Printing more money causes inflation. They will need to raise interest rates, reduce activity. But the point is that the inflation is not due to, people being rich and spending money willy-nilly, but is due to the fact that there is now more money in the economy. So what the actual policies, the economic policies are doing, are making it harder for people to carry on and go through their daily life. So we are in a situation where it's kind of with full employment, but more than 50% of the American population could not afford an extra expense of $1,000. So where are we going wrong in this picture? Okay, and do you think that by making people's lives more expensive is actually solve the problem? So basically, you are starving people to solve these fiat money castle cards. That it's coming to a head. It's coming to a head. It's difficult to say when, but it's a matter of when, not if. and this is my my opinion. So take it with a take it with a pinch of salt if you want, but this is my belief. And so going on to crypto, we've had Bitcoin, obviously during the banking crisis, has actually increased in value, from the mid-20s now to the to the high 20s. And you can see here in the chart how it is basing, in this kind of range between 26 and 26 and a half, 28 and a half. There's about $2,000 range in there, and it's kind of like shy of, you can see what the top of this range is right here at the bottom of this one. Okay, can you see how it matches? So this is the next area that Bitcoin would like to get into in terms of pricing. Okay, which is again about I would say what is this? About $3,000 range between 28 and a half and 31 and a half is where probably, if we manage to get above the $29,000 mark and close about 29, then that would be the next period where Bitcoin will spend a little bit of time. Okay, but the one thing that I wanted to mention to you is that, again, you can see, as we're not looking really at yet, at least, at another bull cycle of Bitcoin. At the moment, this is all like due to the banking crisis, and it is reassuring in a way to see the money that is that actually the money flow that came out of the banks some of it has found its way into Bitcoin. But also we need to see, as some of this money now has found its way back also into the stock market. So we are back now at the levels in the stock market, the levels that we were in before the crisis. Okay, so pretty much, you can say, you could describe this as, crisis. What crisis? Yes, there's been a big, sell-off due to panic, and now, things have got to normal again, at least in general market terms. Okay, if we look at the banking sector instead, we might be seeing kind of like a different picture. Okay, so this is the XLF, which is the financial sector ETF for the US. As you can see, it stopped dropping for the moment. Still is nowhere near where it was beginning of March. And this is where the big crisis happened. You can see the drop in the financial sector. But if the banking sector is not out of the water yet and is going to encounter more problems, where do you think these problems may be seen first? Probably the banks. They are more vulnerable. They are less capitalized, and so we will be looking at the regional banks rather than the big national banks. And there's a couple of ETFs. Probably the best one would be this one, which is a regional bank ETFs. So, and you can see as well by the latest moves in this past couple, 2 or 3 days, that it is showing kind of like a weaker chart than the XLF. So because if any, the new bank failure, if any are to again go to the wall, will come from from the components of this fund rather than the XLF, and have more of an impact on this than they would on the overall banking sector. So we are back at levels that we've had in November 2020. It's almost kind of like, at the moment, we wiped out 2.5 years of growth. 2.5 years of growth. So we're back. As you can see, we were actually above this level in 2018. Okay, and this is kind of something that I wanted to compare with you, because this is 2000. Do you remember what happened in beginning of 2018? Was the latest Bitcoin peak? Okay, before the latest one. So we're here in the banking sector. We're looking at was that 20%, almost 30% drop, from the prices of 2018. And let's have a look instead of Bitcoin. And go into a weekly chart. Oh, come on, why is it not? Oh, let me just change this, because this is the BUSD chart. Okay, and if you see instead what is happening slightly different in Bitcoin, this is the end of 2017. This was the last Bitcoin bull cycle before the recent one. So you can see widely what is happening is that in Bitcoin is actually the last bull cycle is provided almost like a floor for the bottom of the current bear market. Okay, where compared to the banking that instead has dropped about 30%, on here we've had a maximum of, where are we? Oops, sorry, I pointed in the wrong direction. The maximum that we have seen actually is, funny enough, is about 20%, but it's to show how Bitcoin has been more resilient compared to the banking sector. And so some of the deposits, some of the funds that are traditionally being held in banking are now finding their way into crypto. Okay, because on one side we have a rhetoric against crypto. So this is the next thing now we're going to talk next into crypto. We have something like, you might have heard about Senator Warren, and this is the campaign material. Okay, so I'll show you. Elizabeth Warren is building an anti-crypto army. Okay, and I'll show you the old video. It's only about 10 seconds long. So talking about anti-crypto, over-the-counter hearing aids, and proposes $10 a day childcare. So these are three campaign, they're three campaign pledges, so to speak. Okay, now if you obviously you've been listening to this call that I do on a regular basis. So how stupid do you think this actual thing is? Because you almost like you are building an army, like an anti-technology army. Okay, it's almost like saying, let's fight against the rise of the television sets, or let's have a fight against the internet or the computer. It just doesn't make sense, because as a crypto is a technology, blockchain and crypto is a technology more than anything else. It would be different if she had said, we are building an army to root out bad actors from crypto, for example, which would be perfectly fine. And as well, many crypto projects would have backed her in that, because nobody wants scammers in crypto. Okay, they want to have clear guidelines on what they can and cannot do, and they would welcome reasonable regulation. But at this stage, I think there is this rhetoric going on in the US, and we'll see not just from some politicians, but also from the authorities. They are going, for example, very hard against crypto exchanges, against crypto projects, and they are trying to almost like over regulate by suing and by doing it, introducing almost like the de facto legislation from the courts. So it is a kind of like a dangerous time. And what this is causing for the US in particular, it's causing many projects to relocate from the US to other jurisdictions. They are more crypto friendly, because the technology will not be stopped. But obviously, they might have an effect on what format it takes inside of the US. So now, when we have this on one side, and by the way, this is probably going to be the first election where crypto would actually be openly discussed, and could be a determinant in when people get elected or not. Okay, and there are now, not just because people obviously know more about crypto and they might be interested to know how they elected representatives stand on the face of crypto, but also because many crypto very prominent figures, like the CEO of Coinbase, for example, like the Cardano founder, and so on, I've been talking about practically financing the campaigns of crypto-friendly politicians. And this will be not necessarily based on a particular party, but it's simply, case by case, supporting politicians that are likely to be friendly once elected to crypto, like many other lobbies do, by the way. This wouldn't be new to anybody. The thing that is new is that this is not party political, and both Republican and Democrats, might have crypto in their wallets, and so it doesn't really matter if the politician supported is a Republican or a Democrat or independent, but it's it may make a difference, because if you see in the American elections, many seats are decided by a handful of votes. So it doesn't mean that everybody must be pro or against crypto, but you only need sometimes a few thousands of votes to make a difference between one politician or another being elected. Okay, so while you hear this on one side, then on the other side we have like Citibank that comes out and says that by 2030, trillions in assets could be tokenized. Okay, so once they're tokenized, that means they live on the blockchain. So you mean that the value of the blockchain, if they're talking about 4 or 5 trillion, this is just their expectation. Where are we now? So we're talking about 4 or 5 trillions. This is the total cryptocurrency market cap is 1.2 trillions right now. So we are talking about 3 or 4 times the value of this in tokenized assets. Okay, and by the way, so that you can get an idea of what is happening at the moment. So if we look at roughly 3 months, so what happened from the beginning of 2023, we were pretty much gone back 800 billion. Well, if you look at on the max scale, 800 billion was pretty much the level that was reached in 2018. The maximum in January 2018, 812 billion. So we have gone back roughly at the end of 2022 to 2018 levels. Okay, and what I've been telling you, I don't know what the bottom will be for Bitcoin or for crypto in general, but start dollar cost averaging, because I don't think we will see these prices, for a long window, and from the end of 2022 till now, the whole market has grown about 50%, okay, in just 3 months, compared to where were we with the S&P 500? So where are we? So the S&P 500 has also grown, but obviously not as much grown by 6%. Okay, 6% during the same period, and the crypto market has grown by about 50%. Just showing you how it is a leveraged asset class, in general. And this is, by the way, is what has been happening in 2023. So the market is being, yes, it has grown a little, but it is really being traded in a kind of like a narrowing range. So instead of trending and seeing kind of like higher highs or going down and seeing lower lows, it's actually trading into a narrower range. So when this happens, really, is the market is waiting for directions. So which way is it going to break? Is it going to break on the way up and carry on growing, or is it going to break on the way up, the way down, kind of like with a recession? I think time will tell, but be aware of the general direction of travel. At the moment, the direction is sideways. Okay, just pretty much sideways. We are, if you calculate the difference between these two, pretty much in the middle right now, a little bit above that maybe, but not much has happened in 2023. Okay, so what was I talking about? So this is the expectation. The expectation is that there will be 5 trillion tokenized assets by 2030. Out of this, they expect that almost about 2 trillion will come in tokenized debt, 1.5 trillion from real estate, and then 0.7 from private equity and venture capital, and another half a trillion to 1 trillion from securities. Okay, so, and this is from, by the way, this is from one of the banks that's been more vocal against the crypto in the last few years. So it's not that we are talking, that really crypto pioneers, they are talking this up. Quite the opposite. But what's happening right now, and this is like, it's funny that this came out at the same time as pretty much this express talk about against crypto was an action against Binance from the Commodity and Futures Trading Commission. They're saying that they don't have authorization to, they didn't register with the CFTC or the SEC before starting to get US customers, and so they opened a case against Binance. And at the same time, there was this rumor that Binance, although they are pulled out of China, they were still operating in China, and that their operatives were telling people how to get around the limitations, the Chinese limitations, how to still have a bank account, how to post, for example, fake ID, and using VPNs to be able to access the Binance account from China. So both the US and China are actively trying to fight Binance, because obviously it's the biggest player by far in the crypto industry. So they want to reduce their authority. We were talking about last week how a judge has actually given the green light for the acquisition of Voyager's assets by Binance against the express will of the SEC and the Department of Justice. Okay, so at the moment they're doing everything they can to bring all the crypto onboarding platforms down. Okay, so, and this is, although Binance in the past couple of years has invested very, very heavily in compliance, there are still there is still this negative action against them. And not only that, but in the general, there is this language that doesn't just talk about anything bad that's been done, but just talking about crypto is bad in general. And like we're seeing here, from going away from the US in the UK, the UK government announced its robust crypto regulation as part of economic crime plan. Now, again, it's saying that crypto is just for just for illicit use, and there are no legitimate uses for cryptos. I mean, it's a little bit rich, to say the least, to put everything under one umbrella, because obviously, yes, there have been a lot of scams in crypto, and so there have been in fiat currency. So I'm not saying that nobody is whiter than white, but at the same time, this is why you want to introduce some sort of legislation that protects people. And I would say that, generally speaking, the actual the reason of being at all, the reason of emerging of the crypto industry and Bitcoin was actually to protect people, not the other way around. So it sounds very false when they are making these claims, but we will see once this legislation, once this regulation come out, we will see actually what they mean for the crypto industry. Okay, but until then, we just have to wait and see. In the meantime, we can see Kraken, which is again one of the crypto exchanges that is more compliant. They've amended the Canada registration because to comply with with greater investor protection, so to speak. So, for example, it will not be possible in Canada to do leverage trading and trading in derivatives. Okay, and obviously, crypto exchanges are businesses, so they have to comply with whatever the regulator is telling them to do. They're not really working for you; they're working for themselves and trying to survive themselves. But you can see following the regulation, several exchanges, actually OKX, blockchain.com, and Deribit, actually left Canada. Okay, so this is what's happening really by all this kind of fight against crypto in places like the US and Canada and so on. It's just making it less attractive for people to for exchanges to operate in those countries. So this new regulation improves the custody and separation of customer funds. So exchanges cannot offer margin or leverage trading, nor allow them to buy or deposit stablecoins. So it's very limiting. It's very limiting, and I don't know how they will operate. So that means that if they can buy or deposit stablecoins, how do you operate a crypto exchange? It means that if you have an account, you can buy stablecoins, so you're going to have to buy cryptos. You're going to have to to buy and deposit Bitcoin, Ethereum, Cardano, and so on, and then exchange them between one another. Or obviously they will have to deposit cash. So instead of buying stable coins, I think a lot of the trading pairs would be cryptos against the US dollar or the Canadian dollar, or so on directly. So in a way, forcing exchanges to work with currencies rather than stable coins. Okay. Now, a couple of more positive news, and then we'll go and get some new questions. Now, Argentinian airline, a regional Argentinian airline, started using ticketing through NFTs. So NFTs on the Algorand blockchain. So the good thing about it is that you buy a ticket, not only it's a digital e-ticket, which is not particularly new, but the fact that you can buy your seat without having to give your name or put the name of the passengers on, and you can transfer or sell this NFT independently. from the airline. So as long as you're in possession of the NFT, you can board the airline. And this is interesting because how limiting buying and selling of airplane tickets has been. So this is another positive move that can increase the use of plane tickets for for customers. And that's another bit of news from the Stuttgart board that now has created a fully digital subsidiary that has received final approval for crypto custody. So this now they can now operate as a crypto custodian, and now they can offer fully regulated brokerage, trading, and custody of digital assets. So again, this will help two classes of people. One is the ones that are scared of operating in crypto, and they want somebody else to look after the safety of the digital assets. And two will be institutions, because institutions require they cannot hold cryptos themselves, but they do require a custodian. And having a regulated custodian and an exchange, a public exchange like this holding your crypto is definitely a positive step. Now, this the Stuttgart Bourse operates in Germany, Sweden, and Switzerland, and also as an office in Slovenia too. So it's not available everywhere, but it's still, it's starting to be available in several countries in Europe. Last news. Let me see. A couple more news. Ledger is actually raising capital as they've seen a demand for self-custody soar after the banking crisis. They actually now they increasing their production, and so they started the first of 3 rounds of funding. So they raised 100 million euros in a Series C funding extension. So that values the company at 1.3 billion euros. Okay, so just to show you how companies that are doing legitimate work in crypto are still growing and growing very, very well. The last thing before we go into questions, it's a Cardano bit of news, and you can hear more about this from Jonathan in his session that we'll do at 9:30 on Discord, and that he does every week. If I remind everybody that Jonathan is a stake pool operator for Cardano. And every Friday, he has a session at 9:30 where he talks about everything Cardano. It can also help you with any technical issues that you have with on the Cardano blockchain. Now, Cardano has it's just the upcoming Hydra upgrade, which is basically introducing a layer 2 solution to the Cardano blockchain, similar to the layer 2 solutions that have existing on Ethereum, for example. What this will do would increase the speed of the transactions almost like exponentially, and also at the same time reducing the transaction cost. So this is something that's seen as a big upgrade, and also there is, if you are that way inclined, I mean, this is not financial advice, but the Cardano price is expected to see some growth, following the introduction of this protocol. And generally speaking, traders are still very positive on the outlook for Cardano, and this is following few years where the way that the people used to talk about Cardano in the media, especially in the Ethereum dominated media, was very negative. So now it has kind of like cut out a small space for itself, where people are starting to see the reality of what the Cardano blockchain can offer. Okay, and this is a very big improvement that can bring. Let me see you some of the things that can do. So they can do, for example, fast finishing microtransactions, and I don't know what microgorging is. And this is the first time I heard of this, but microtransaction is a big thing. So you can then start using ADA for payment, for microloans, and for doing day-to-day transactions that can get even below. Although transaction in ADA are still at the moment are still quite cheap compared to other exchanges. Obviously a transaction that goes below the 1 cent, it's it makes it available to everybody, potentially as a use case. So in terms of price, Cardano's gone from 25, generally speaking, it's at the same growth as the general market. So we've gone from 25 cents to about 37, 38 at the moment. So at 50% growth since the beginning of the year, similar to the growth in the market. Okay, so I think we only got 10 minutes left, so let me stop sharing. Are there any questions? Oh, great. Jonathan has posted, for any of you that want to go to his document, he's posted the link in the chat box. So please click on it and save the link. Any questions? Oh, good morning, Chad. Nice to see you. You look nice in pink.
Thanks. I'll take that as a compliment.
It is a compliment. I've got several pink shirts myself, so it's I'm Italian. Pink and blue looks really nice.
I got caught out by the time your time zone changed, so sorry I'm late.
Oh yeah, that's all right. I mean, I think after this weekend, this weekend is New Zealand and Australia, and the last one to adjust the time. So after that, we'll have a few months of peace. We can get used to the new time zones. The same from Australia, I think, it's an hour earlier than usual for people tonight. Okay, so any questions? Can be related or not related to what I talk about.
Yeah, I've got a question to ask. Yeah.
Go ahead.
Yeah. I was given this login by Paulina. So do you meet every Friday or what?
The crypto hour is every Friday, 8 a.m. in the UK time.
8 a.m.
Yeah, UK time. So where are you based, Teresa?
I'm based here, UK.
In the UK, yeah. So it'll be 8 a.m. for you.
So do you discuss about how to open the crypto or what, or just to tell us the market?
Well, we talk about crypto in general, so about what is happening when new things are happening in the markets, and also in general macroeconomic markets as well.
Okay. All right. Okay. I'm very new. I didn't know about it. Yeah, that's fine. I'll be joining in.
That's all right. Thank you. Yeah. Welcome in, and we're happy to have you.
Thank you.
Eric, you raised your hand before?
Yeah, I was away for a few weeks, and didn't hear much of the market, just something was going on with Binance. But I think you answered that question, didn't you, about Binance, what was going on?
So at the moment, there have been, you make your own judgments. There are people going against, trying to fight crypto in all its in all its facets. So Binance is the biggest exchange, so obviously we'll have a lot of heat on it for any reason. There have been about 2 billion of outflows from Binance. I mean, I don't expect any big problems to happen to Binance, but then it's still a company, it's a centralized exchange. So, for long-term holdings, it's always better to keep them away from exchanges. So generally speaking, I tend to keep on exchanges only things that I'm looking to actively move and trade. Where for long-term holdings, I take them away on put them on my ledger generally.
Thanks very much. Thank you.
Yeah, no problem.
Hi, Luca. Sorry, Luca, can I just ask a question?
Yeah, sure. Carry on.
I suppose if the Fed are now doing the reverse of what they were saying in terms of they're starting to loosen the money supply, that is going to put more inflationary pressures then. So how are they going to manage the economy if they're trying to get down to 2% inflation and they're loosening the money supply?
But now you see what they kind of it's a juggling act. It's a juggling act. That's what it is, because their weapons are quite crude.
Yeah.
So they can do monetary tightening, monetary loosening, and they can the interest vary the interest rates. They can vary the multiplier that the bank, so how many funds the bank have to keep, in proportion to the money that they're lending, so the liquidity. So those are the kind of like weapons that they can use, but they're quite crude weapons, So, and the big difference, I mean, for this for this particular cycle, is being that this inflation is not economy related. It's actually simply a monetary inflation being caused by the money printing. So I don't understand how anybody, and there are many politicians that have gone, I've gone on record saying that all this money printing wouldn't cause inflation. I think it couldn't do anything else. It couldn't do anything else but create inflation. So at the moment, until the situation normalizes in the banking sector, they can't afford to raise interest rates. They just can't afford it. Whether they lower it, we don't know.
And I suppose the question, when we had 10 years of loosening monetary policy and quantitative easing, why didn't that cause inflation?
Well, it did.
Well, but the inflation rates were kept low.
Yeah, inflation rate, but not asset growth rates were not kept low. Okay. So do you think that a 15% annual growth is normal?
No, obviously.
So this is how you see it. So this is how you see it. You see in house price inflation. You see in assets inflation. So look at the S&P 500. Over those 10 years, it grew at about an average of 15% a year. So this is how you see inflation, how it manifests, because the inflation measures are actually manipulated. They choose what goes and what doesn't go into the inflationary basket. And when they say one of the favorite measures of inflation is a measure of inflation that doesn't include food and doesn't include energy. Now, tell me, this is where we spend 90% of our money is food and energy. So what does it mean that you don't look at those as in your inflation figures? So generally speaking, inflation figures are much higher than it's reported.
Okay, thank you.
So this is just being, what's it called, is being pushed to a different level because it happens so quickly. So that's the problem. There was somebody else. I think Paul was asking about numismy. What do you want to know about numismy, Paul?
Channel looks like two of their larger investors have pulled a large quantity of finances from them.
So which what basically is at the moment, for the time being, they stop development. So if you have any funds in numismy, you should sell them, or whatever you can get at the moment, because we don't know if it will be restarted anytime in the future. So if you staked any coins with them, unstake them. If you actually staked and locked the coins, you need to get in touch with them on Discord, and they will send you the value of the coins in your wallet. But what they also said is that if you have staked numismy coins with them and they restart at any time in the future, because they might also restart on a different blockchain, or away from Ethereum, on a different blockchain, then people who were investing with them, and they will receive the equivalent value in the new project that might be called a different name and might be a different blockchain. But at the moment, just if you have any funds in Numisme coin, just get out of it as quickly as you can. So let's see. Yeah. I don't know what the latest value is, but I think when I took mine out, I think last week it was about 1 cent. I don't know what it is now. I can look at it.
0.08, I think it was.
0.08. So yeah, obviously it's reducing, but they are. Sorry, where is it? But he said he's not going to go up again anytime soon. So just whatever you can get really at the moment. Okay, so it's gone down even more since last week. Yeah.
I look at, I think it's just been announced that one of the original, or two of the founding members of the team have sold their vested tokens because their vesting period has just opened up. So now the liquidity is leaving the project at pace.
Yeah, no, I can see that it happened. I wasn't aware of it because actually I got completely out of the project last week. But yeah, I can see that from yesterday. Because we were about 1 cent yesterday. Today we are just like not even a tenth of a cent. All right, so yeah, sorry to see that. I didn't see that. I thought they were maintaining the peg to about 1 cent. But obviously not. Okay. Chad, what is that? Okay, fantastic. So if anybody wants to attend the session, Chad and Cashbox Global are doing on the global banking turmoil and its effects, then there's a link posted in the chat as well.
Sorry, I didn't mean to.
No, it's
didn't mean
fine.
to distract, but maybe just to Jeff's point. Yes, we've had so many questions, Jeff, in line with what you're saying. So if anybody wants to step in, and Luca, we'd love you to be there too if you'd like. The questions are all over the show, so thank you.
Yeah.
In terms of
no problem.
manipulation,
love to be there. Is that next Tuesday, isn't it?
that's correct. So I've put in, that's the Central African time. So just to watch your time. But if you did register on Cashbox, you would have gotten an invite all at the same time. So up to you. We're going to get some guys from the UK who could be chatting as well. So it should be an interesting discussion, and we welcome questions beforehand or during the conversation. Make sure that gets answered. Okay, fantastic. So that would be, I think it should be, you are 2 hours ahead of us, aren't you? 1 hour now. 1 hour, okay. So your 6 p.m. will be 5 p.m. for. That's correct. For the UK. Okay, no, thank you very much. And I say, any genuine contribution, we happy to promote, so this is why we always talk about Jonathan's and what it does, because when you're doing good work and you're informing people, it's always good to share. Right. Okay, so unless are there any other last minute questions, otherwise we'll close the call here and we give you time to go and make yourself a cup of tea before joining Jonathan for his session. Okay, all right, no problem. There are no more questions coming. And could you have a minute for me? Yeah, sure. Sure. So if you stay on the call, I'll stop the recording now. And we can chat. So Luca, we've been working in the background